What's going on, people? Welcome back to the fourth and final part of this series of how to build your edge. So there's still some extra parts that we need to add into our trading plan to be able to have a full comprehensive trading plan, so we really have no issues when we come to actually executing our plan. Now, one of the things that I think is relatively important, I don't think it's majorly important because basically it doesn't help you over the long run, but what it does do is it helps you with your psychology around being able to take losses and being able to understand that your system is profitable over the long run. And that comes down to what is your general win rate of your system. Now, in part 3, we went over the game of flipping a coin out with heads or tails, having a 5R win on the heads and then a 1R loss on the tails, right? If you actually play this game for yourself and write down all of the results, you'll see, that the results can be absolutely mega. Now, change it up, right? Obviously, what we need to be doing is figuring out what the risk to reward potential that we can actually get from our system is. Are you happy with taking 1 to 5s? Are you happy with taking 1 to 4s? It absolutely depends on you per person, right? Like, everyone is different. Now, once again, we all know, if you've been keeping up with my previous videos, you will understand that the market conditions have been slightly adjusting or changing. So what you need to do in your system is you need to be able to understand how you're going to adapt to these different changing market conditions, right? You need to know, is your system better working in a trending market? Can you do something else when it's in a consolidated market, right? Do you just trade from the extremes? Can you pull the premium versus discount tool on the range to be able to find where is a good place to buy, where is a good place to sell? There's many different ways to be able to approach different conditions, but what you need to do is find what works for you. Now, trade management is one of the big ones. Now, I definitely believe that you can have a set rule. Let's just say, for example, like we were saying a moment ago, of having a 1 to 5 solid TP, right? No partials, just taking 1 to 5s. Now, that is absolutely fine. If you're someone like me who likes to hold a little bit of a longer trade, get in more of the intraday swing positions, then what you may want to do is you want to adjust to each scenario accordingly, right? Because sometimes there might be everything counter trend. Sometimes one thing might be counter trend, one might be pro trend, right? I don't have a specific way to be able to manage my positions when I'm looking for these longer positions or bigger positions, because I cannot have a specific rule set, right? Now, I can have a specific rule set for when it's like this and when it's like this, right? But I do need to adjust, because sometimes I can't just say, I'm going to target 50R, because the trade might not actually allow me to have 50R. I have a very general idea of how I'm managing the trade, right? And I need to understand that if I'm looking pro trend or if I'm looking counter trend structure, and if I'm looking pro trend or if I'm looking counter trend order flow, then I know different ways of how I'm going to be managing that trade. This thing comes back down to risk appetite, right? Are you wanting to go to break even? Do you want to protect your position very quickly, right? For me, sometimes I do, depending on how the market forms. Sometimes I don't. Sometimes I just let it run. Sometimes I will leave my stop loss open if I feel like I'm picking, for example, the bottom of the market, right? Or the bottom of the leg. Trade management is down to each person specifically. Even if you're in a community and you're trading the same system, everyone is going to have their own kind of tweaks on it, right? Everyone's going to be trading slightly different, right? Because everyone has their own understanding on their own everyone's on their own development journey. But the important thing is not to try and fit into a mold and try to actually make it fit you. Another thing that could be quite handy for you, if you know that you're a bit of an impatient person, is understanding how often the setups that you're looking for actually form. And the way that you can do this is by going through every single month through the past year and looking at when these setups actually form. Now, if you're on the lower time frames, you definitely aren't going to be able to do this, because you can't get that back that far unless you're using a trading software or a backtesting software. Then you can get down onto these lower time frames, I believe several years back, even on the 1 minute time frame. So that is really great. I don't really know much about it because I haven't really done it myself, but I'm sure there are many videos on YouTube explaining or going through the different types of simulators in which you could use to enhance your trading strategy development. Now, these 2 points follow on from part 3, where we said about journaling, right? So what you need to do is you need to backtest, okay? So that's obvious. We need to get at least 100 examples of, for example, each concept. We need to get 100 examples for each entry criteria. And we need to backtest each concept until you fully understand it. You need to be able to define all of the different ways in which each concept forms, right? So we're going to have POIs that form slightly different to other ones. We're going to be having different refinements. We're going to be having, each specific way that you need that POI to form, you need to know about it. For premium versus discount, you need to understand where to pull the premium versus discount, where is wise not to pull it from. All of these general questions that you can ask anyone, right? And they may not give you the answer, or they may give you the answer, but these are the questions that you need to answer, right? If you're asking yourself, I don't understand where to draw or change your character, that's what you need to find out. You need to backtest. And sometimes you are going to have to merge a few concepts together to be able to backtest them, right? Typically what you'll do is you will backtest each concept separately to understand the concept itself, but then maybe, for example, change of character, where to use it, you might need to merge that with POIs or with liquidity or with XYZ to be able to get a full understanding of where you can use it. And then this leads us nicely on to case studies, right? So case studies, what that is it's going to be building case studies for every single week. And what you want to do is you can either leave your markups on for the week, right? And then what you want to do is take images of each time frame throughout the week to be building a database. So what you can actually do is you can continue to be confident in your system as the market is playing out over the weeks, months, and years to come. This will also help you in periods when you're maybe down, or maybe you're in drawdown, or you're taking a few more losses than you would not usually. And this may help you develop your understanding that maybe you need to be a bit more patient. Maybe you need to take a few less setups. Maybe you actually need to decrease your risk. Whatever it may be, the case studies are really going to help you out in the long run, because you're going to have basically months on years of data eventually, and then you can go through all of this information, and then if there's anything that you do need to change, then you're going to have a lot of data there without actually knowing that you're doing it, which is going to be able to back up your points and say, look, this is how much data I've got on this, I know this works over the long run, so you can keep moving forward with it. Now, one of the main questions that I get asked all the time is, how do I build a narrative? What is a narrative? And why is it actually important to have a narrative for when you're looking to trade? Narrative basically acts like the intraday bias for your daily bias. The way that we build narrative is by using an understanding of all of the concepts that we have at our disposal at all times to be able to read the story that is being written for us in the charts. What we need to do is we need to technically decode it, and the way that we do that is with the concepts that we use. So your narrative on a day-to-day basis might look something like: structure is bearish, order flow is bearish. Then you have POIs, which are in the premium of a bearish market. Then you have liquidity, which is before your POI, which is acting as inducement, so you don't get taken out in the larger POI. Then once price returns into this POI, or this higher time frame POI that you have, that is your narrative built. Then what you're doing is you're looking at your entry model, okay? So a trade is based off of a narrative, which is a higher time frame story in which is telling you a direction. What direction do you want to go in? This is what the narrative is telling you. Then you have the entry model, right? The entry model is telling you how to get into that position if the trade is going to play out in your favor. And then last but not least, one of the things that I think is so underrated, or people don't, try and work on this enough, is anticipation skills. Anticipating that one of these concepts is going to form, okay? So for example, when we're looking at structure, the first thing that I'm thinking about is, where is the new structural break going to be, okay? And this gives me my swing points, and then I also understand my internal structure, which is something that we've gone over on this channel. If you haven't checked it out, make sure to go through the channel and check out the different types of breaks of structure. But instantly, before that structure is even broken, what I'm doing is I'm anticipating where I'm going to be pulling my premium versus discount from. So I know exactly where price needs to come back to, so then I have a rough area in which I can then build a narrative around with my understanding of the concepts to be able to potentially get into a trade. So I'm building this narrative, building this understanding and this story around where I want to be able to get into the trade before it's ever even happened. Now, the way that we build on these anticipation skills is very, very simple actually. First, you want to be able to understand where each of these concepts forms. For example, change of character is going to form in a very specific place that you're interested in. You're not interested in change of character from absolutely anywhere. Then once you understand where you're looking for the concept, then this is going to give you a much better understanding of what is actually then going to happen. And then you can start anticipating, well, this is the low, so this is the high, so this is the lower low. So here's my change of character. So this is going to be the high, right? For example, something like that. So next time you're in the market and you're looking for a setup, make sure you're following the narrative, okay? Build the narrative, then get the entry model. When you're getting the entry model, then what you can start doing is trying to anticipate where the change of character is going to come. This is one, going to help you keep on your toes and keep with the market and what's actually happening. And two, you might get a very nice position out of it. Thank you very much for joining me in this series. I hope it's been very insightful for you and you've taken a lot of information out of this series to be able to help you build your own system. I couldn't find anywhere else on YouTube that had this, so I thought I wanted to be a little bit different and I wanted to be able to provide you some very valuable information as always. So if you did take value from this series, then make sure to hit the subscribe button, share with any of your friends to let them know that this is how you build a system and a working edge in the markets. Take care. I hope you have a great week in the markets, and I'll catch you in the next one.